It's a nice time to sleep, right? So I'm from the P2P Foundation. Yesterday I told you what the P2P Foundation is. Now all of you know what the P2P Foundation is. So everything started. The genesis of the whole crypto revolution. So I gave a talk. I gave a long presentation to one of the central banks in ASEAN, talking about what's happening. I also gave a talk on Libra, based on a research project I was involved in on studying corporate digital currencies like Walmart and all that stuff. So if you just put my name, Karthik Iyer and Libra, you'd be able to find some of these talks online. So I'm just going to do a quick summary. So this is going to be like 3 or 4 slides, quick summary, giving you a heads up on what's coming, right? So there are 3 pillars in our society. 1,000 years ago, all the economic activity was conducted by kings. There was a book by Francis Fukuyama, which is called The Origins of Political Order. He says that China was a modern republic. They centralized power. They became, they collected taxes, built big armies. Every country around China became a very big sort of republic, just like China. And they started printing money, right? So the governments became the, way to print money. The British East India Company became the first private enterprise to conduct economic activity. The Queen basically gave British East India Company the right to run India and all the colonies out there, right? So private enterprises became efficient because they reduced transaction costs and you could get economies of scale. Around 2004, Michel Bowens, the founder of the P2P Foundation, came up with a paper called C Theory, which spoke about how people who come around a technology organize economic activity, car sharing, house sharing, all of that stuff. It became a seminal paper and kickstarted what we see today as a peer-to-peer revolution. So central banks want to get into this game because the ultimate thing is to control monetary policy, right? So a lot of countries, you have negative interest rate, which means that when you keep your money in the bank, you lose your money. So what they want to do is that unless you really understand the money supply equation, you would not be able to know what the negative interest rate implications are. So central banks would love to have digital currencies because they want to control monetary policy better, right? And there are 2 different types of digital currencies right now. So the Chinese renminbi, for example, is a wholesale and a retail, central bank digital currency. What do I mean by that? Today, when you have a bank-issued currency, they do something called a settlement between banks. And that takes anywhere between 1 to 2 days. With a central bank digital currency, you could basically settle in a matter of minutes or seconds or whatever. So there's a project in Singapore called Project Ubin, which is a wholesale retail currency. It's only used by banks. It's not used by the public. Whereas the Chinese central bank is both a retail and a wholesale, right? So it's going to be a digital renminbi that people can use, they can transact with it, but also be used by banks and things like that. Countries have something called as capital controls, where they want to reduce the amount of capital outflows from the economy. That's very important. So when you have wallets and digital currencies, governments can, control capital outflows, in a much more stringent manner. It's easier to deal with the black economy. Like, most of Asia, there's a book by Hernando Soto called The Mystery of Capital, where he talks about debt capital, where he says that the underground economy in Asia is twice as big as the real economy. So think about demonetization, all the other things. It could be done in a much more efficient manner if government gets into a CBDC kind of a model, right? It's easier to do currency swaps, right? So people use the US dollar now as a central currency. They peg to the dollar. They do international transactions in dollar. But you could actually do atomic swaps and currency swaps between digital currencies, which makes it much more robust. You can manage price volatility with digital currencies. Today, if you want to do international payment, it takes anywhere between 6 to 7%, fee to do international money transfer, right? So with central bank digital currency, it's much faster. It's faster to settle. It's faster to transfer. Highly efficient way to transact. So there's a Bureau of International Settlement, the Bank of International Settlements, which is the international bank that does cross-border money transfer, payments, settlements, etc. They do a lot of study, research, and all that. So they've said that almost 1/3 of the countries in the world will start using digital currencies over the next 10 years, starting with Laos, Thailand, Hong Kong, China, mainland China being one of the biggest ones. The Swedish e-krona, which is a digital currency initiative by the government of Sweden. So all of these things are starting out, and you'll see tremendous amounts of digital currencies out in the market, and basically having massive efficiencies. Instead of using Swift, MasterCard, and all these large payment networks and paying royalties to them, they will use their own blockchains and they'll transact between blockchains. So the technology is really not a blockchain, right? Because it's highly centralized. If you look at the Chinese renminbi, it's basically a hash on a central database. It's really not a block or a chain. So if you look at other digital currencies, are highly centralized because they want to control it and they want to have faster transaction speeds. So the first pillar is governments, and the second pillar is private institutions, right? So 3 pillars in a society: governments, private institutions, and the people. So when you look at Libra, Libra is the first kind of initiative from Facebook, highly different from the central bank digital currencies because it's semi-centralized. What do I mean by semi-centralized? Libra is not a blockchain. They use a protocol called Hot Stuff, which is basically hashes on a Merkle tree. How many of you know what a Merkle tree is here? Okay, not bad. It's like 3-4 people. It's like pretty impressive. So they use a Merkle tree. It's not block. It's not a chain. It's a Merkle tree, and they have 100 validators, which are 100 big companies that participate in the Libra network, right? So you have Visa, your PayPal, all the big companies are part of the network. So 100 companies, each company contributes to $100 million, and they become a validator. They use a proof of stake mechanism. So you have to stake $100 million on the network to become a validator. And then they do the transactions on the network. So Facebook is bigger than most countries, right? They have 2 billion users. So it's the biggest country in the world. So imagine doing royalties, cashbacks. You put a post, you like a post, you get paid for it, things like that, right? I mean, it'd be phenomenal. And also the central bank currencies are highly volatile. So Facebook's currency is based on securities, government bonds of stable currencies, a basket of currencies like, let's say, Swiss franc, Norwegian krona, things like that. It's highly stable. So this is the second option, right? Which is private institutions want to become like the central banks. They want to potentially have leverage on the money, right? Maybe have fractional reserve banking or whatever. 2 billion people, you could provide all kinds of services, right? Banking, financial services, loans, decentralized finance, things like that. So if they come in, I think there'd be a massive challenger to the big banks. And semi-centralized, as I spoke to you about. And the final thing is crypto, right? So how does crypto come into play? I mean, you have the central banks that are competing for digital currencies. You have private institutions like Walmart and Facebook competing against digital currencies. So what would be the role of crypto? And the role of crypto, as my friend Tone Weiss says, is unconfiscatability, right? It's fully decentralized. Nobody can take the money away. So, Libra can lock your wallets. Central bank digital currencies can lock your wallets. With Bitcoin, nobody can take the Bitcoin away. It's your private key. And it's fully decentralized, right? So we saw the Bitcoin price go up recently to 8,000 because of what? Why did it go up? Because of war with Iran, right? It's flight to safety. It's fully decentralized, right? So if you have an embargo against a country or whatever, nobody can control it. It's fully anonymous. So you cannot capture the guy who created Bitcoin, right? Nobody knows who Satoshi Nakamoto is. So, we will see a peaceful coexistence of all the 3 different value regimes, of these 3 pillars in the economy, which is private institutions, governments, and people creating their own currency like Bitcoin, right? This will be the future. And so I've spent 10 years in the space looking at, Bitcoin, altcoins evolve. I think the next 10 years would be very exciting to see how governments compete with private institutions and how private institutions, compete with privacy-based coins like Zcash, Bitcoin, all that stuff, and see how these things evolve. Well, thank you very much, and I hope I didn't put you to sleep. Is everybody awake right now? Yeah. Did everybody understand everything I said? No? Maybe? Yeah? Kinda? Nobody's shaking their heads. Okay. All right. Any questions?
Hello, I am Mohammed Bahiri, Muhammad Ali. What is the effect of Libra on cryptocurrencies? Negative or positive?
I think, Libra has its own purpose, which is, to activate people who are unbanked. A lot of people in Asia do not have bank accounts, but they have cell phones and they have Facebook. So all of these people will get into, Libra. So Libra would compete against stable coins. It won't compete against Zcash or Bitcoin. Bitcoin is fully decentralized. Nobody can take Bitcoin away. Nobody can stop Bitcoin. It's like taking off the internet. The internet when it was designed as a headless node. There is no central server. It's based on DNS, which is fully decentralized. And Bitcoin's like that. It's 50.1% consensus. Even if there's a nuclear war tomorrow, the only thing that'll be left behind is Bitcoin because the ledger is fully distributed around the world. So each of these different currencies have their own role, and what will typically happen is it'll compete aggressively with US dollar, Chinese renminbi, and all of that because they're backing it with very stable government bonds, European bonds, stable assets like gold, etc. So not with the cryptocurrencies that we know today, like Ethereum or Bitcoin, but it'll have a strong competition to stable coins and other things out there. So